In this video, I'm going to explain how physical commodity traders can make money without money. I'm going to break down for you 3 deal structures that traders can use to literally make money out of thin air. And if you are a bit skeptical, just stick with me. You will see this is no theoretical BS. As a former commodity trader, I used all of those structures. But I want you to listen to the end of the video because I'm going to explain the deal structures. Then I'm going to give you the key to make them possible. Let's go! Here, the idea is to match your sales payment terms with your purchase payment terms. So remember, you are a trader, you are in the middle of a supply chain, and you have a commodity producer on one hand and a commodity end user on the other end, and you are in the middle. So let's take an example. Let's say that you purchase a couple of containers of refined palm oil in Malaysia and that you want to sell them to an importer in Congo. Usually, the Malaysian producer will ask for a payment of 20% of the value of the good at the deal conclusion, and then 80% against a copy of the shipping document. So in that case, you can ask the very same payment term to your client, 20% at the conclusion of the deal and 80% against a copy of the shipping document. Of course, this deal structure is extremely weak, as a trader you do not provide any value beside the matching supply and demand. And in today's world, this is not enough. Here, the idea is to get enough credit from your supplier so you can collect the payment from your buyer before having to pay him. For instance, if you do intra-European trade, usually countries that drink wine are really slow to pay invoices compared to countries that drink beer. So how could you play on that cultural differences? You could buy a truckload of rice, wheat in Italy and resell it in Germany. You could easily get a 30-day invoice from your Italian counterpart and issue to your German customer an invoice payable under 14 days. A more extreme example will be what I negotiated with a couple of palm oil suppliers when I started my second company. I got the following payment term. I had 120 days to pay them after the shipping of the container. So it let us enough time to get the container to Senegal, to unstuff them, to distribute them, to collect the payment, and finally to pay the suppliers. Cool, no? There are alternative funds, and their sole purpose is to finance commodity trade flows. So basically, it works like this. You can come up with a purchase contract, a sales contract, and a detailed P&L of your operation, and you can ask them to fund your deal. Usually, they finance up to 80% of the value of the cargo, but I know that there are cases where you can ask them to finance up to 100% of the value of your cargo. So now if you are thinking, yeah, I'm gonna start my own commodity trading firm with no money, yeah, great, blah, 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 blah.
Let me take you back to reality.
First, when you need to get finance, usually it's expensive. It's expensive money. And if you compete against bigger company with a well lower financing rate, maybe you just can't be competitive at all. Then you will not get the payment term you want or your deals to get finance as you wish if there is no trust. No trust in you, no trust in your deal, no trust in your company, no trust in your jurisdiction. This is why, to palliate this lack of trust, anyone that would grant you any type of credit will ask to see your company balance sheet, your counterparty's balance sheet, will ask for collaterals, will ask for a credit insurance, or even could ask you, the owner of the company, to get a life insurance. All of that to palliate a lack of trust. So this is the reason why those deal structures are quite easy to pull off when you are an established company with a track record in a well-known jurisdiction. But extremely difficult when you are just starting. That being said, difficult doesn't mean impossible. I got extremely favorable payment terms right at the beginning of my company. So at the end of the day, everything is possible. And it might be the case that you are way better at conveying trust than I. I mean, I'm the guy that makes videos on YouTube, so how low is that? So that's it for me today. I hope that you learned something and that you liked the video. And quick announcement, I'm about to launch, or I have launched, depending when you watch this video, a course where I teach the TLT framework, which is basically a framework that I teach to make you a better commodity salesman. So if you have like any interest to upgrade your skills, just check the first link in the description below.
Ciao.